Welcome back to Global Briefing. Today we bring you a deep dive into one of the most dramatic moves of the Russian state in years, and its ripple effect across economics, politics, and power within the elite. In recent months, reports have confirmed that the Kremlin has taken control of, or forced the surrender of, approximately $55 billion in assets from Russia's richest business figures, often referred to as oligarchs. This sweeping action is not just about punishing dissent or consolidating power. It is an urgent response to a mounting economic crisis that Putin's government can no longer ignore. To understand what is happening, we need to look at the forces driving this seizure, the crack in the elite that it reveals, and what it means for Russia's future. And for those watching from outside, Russia has been under intense pressure for years. Sanctions from the West, overextension of its military ambitions, volatile energy revenues, and shrinking foreign investment have piled up to create what many analysts now call a structural economic crisis. Some key indicators. 1. Growth forecasts have been slashed. The IMF and other observers now estimate 2025 growth at less than 1%. 2. Russia's budget deficit has ballooned, with oil and gas revenues falling 18 to 20% in some quarters. 3. Core industries are faltering. Coal mining, for example, has entered a crisis not seen in 30 years, racking up billions in losses. 4. Major industrial firms are reducing hours or laying off workers to stay afloat. Put simply, Russia is running out of easy sources of revenue, and its backs are against the wall. Seizing assets from wealthy business magnates has multiple advantages for the Kremlin and risks. 1. Quick revenue injection. At a time when government coffers are stretched thin, confiscating private holdings offers a way to raise cash rapidly. Some of those assets may be sold, reallocated, or simply converted into government control. The $55 billion figure likely includes both forced transfers and legally coerced donations through opaque court rulings. 2. Reassert state control over key sectors. Many of these oligarchs had stakes in strategic industries, energy, infrastructure, logistics, metals. By absorbing or redistributing control, the state can centralize authority over sectors essential for both economy and war. 3. Discipline and loyalty within the elite. This move sends a chilling message. No one is immune. Even oligarchs who have long aligned themselves with the Kremlin may now find themselves vulnerable. It reinforces the idea that their fate rests on Putin's favor, not private contracts or wealth. 4. Weakening independent power centers. Over the years, some oligarchs built fiefdoms, networks of clients, and financial influence that could, in theory, become bases of power separate from the state. By dissolving or absorbing these, Putin reduces the possibility of independent challenges. But it's not risk-free. The seizures are drawing criticism from within the Russian economic establishment. In a rare pushback, the Russian central bank recently accused the government of breaching minority shareholder rights in some high-profile asset grabs. That tension hints at fractures within elite circles. Tea is not as simple as dispatching police to knock on doors. The government has several tools at its disposal: court rulings and legal pretexts. Many seizures are framed as confiscations due to alleged tax evasion, financial malfeasance, or extremism. State claims through the prosecutor's office. In 2025 alone, the state claimed $28.7 billion in property through court decisions. Forced nationalizations. Entire companies or vital assets are brought under federal control. Asset swaps or conditional arrangements. Some oligarchs are permitted to retain parts of their holdings if they cede key control or accept state oversight. Resale to trusted proxies. After confiscation, some assets may be transferred to Kremlin-aligned businessmen, preserving appearances of privatization while keeping effective control centralized. This methodical and often legally couched process allows the state to maintain a veneer of legitimacy, even as critics argue it mirrors Soviet-style command. This purge does not target random billionaires. The most vulnerable are those whose fortunes are built on strategic assets, government contracts, export revenues, or foreign ties. Among those affected, Zayev viewed in Magomedov, a notable example. Once one of Russia's rising billionaires, his empire was dismantled, his assets seized, and his legal appeals rejected. Former foreign-linked companies, some foreign energy and consumer firms that exited Russia have had their former assets reassigned to state or loyalist hands. But not all oligarchs fall equally. Those deeply entwined with Kremlin networks, whose wealth is based on logistics, mining, or military supply chains, or who have maintained staunch loyalty may yet remain insulated. For now, a new class of oligarchs is emerging, those who operate within the system, never challenging state control, never crossing invisible lines. Their power is conditional, not autonomous. At this point, we must ask, if wealth is no longer private in Russia, is there any real security in being an oligarch? Does money still guarantee influence? Or has it become a burden, a target to be taxed, or repossessed at the whims of power? Let that sink in as we consider the broader consequences. Domestic risks. Investor freeze and capital flight. Domestic and foreign investors now see Russia as unpredictable. If even powerful oligarchs can be stripped, why invest at all? Capital is swiftly leaving or being hidden abroad. Breakdown of legal norms. Ignoring shareholder protections, contract sanctity, due process. These moves erode what little trust remained in Russia's legal system. Economic dislocation. When the state takes over companies unaccustomed to bureaucratic management, productivity, efficiency, and innovation risk collapse. State-run versions of private enterprises often underperform. Elite backlash. Disgruntled elites with resources or international connections might resist or form conspiracies. We have already seen hints of tension between Russia's central bank and the state over property seizures. Foreign fallout. Diplomatic and sanctions implications. Western governments and international investors may respond with further sanctions, lawsuits, and capital blacklisting. Frozen Russian central bank assets. While this domestic seizure is not directly related to frozen central bank reserves held abroad, the broader message is the same. Russian state actors view property as extension of sovereign interest. Russia's reputation as a bad actor. Every asset grab reinforces the idea that Russia operates by force, not by rule of law, that will affect future negotiations, trade deals, and alliances. The confiscation of $55 billion from Russia's richest is not just a dramatic headline. It is a sharp lens into how power, money, and survival interact under authoritarian pressure. In Russia today, wealth is no longer purely private. It is a resource to be claimed by the sovereign when needed. For the oligarchs, the question is no longer how to amass influence. It is how to survive without becoming a target. For the Russian state, the gamble is whether this takeover will plug the gaps of a faltering economy or accelerate its collapse. As we continue to monitor this story, one thing is clear. Russia is not just at war abroad. It is at war with itself, with its elites, and with the concept of private wealth. Thanks for watching Global Briefing. If you found this analysis useful, hit like, share, and tell us in the comments. Do you think Russia can sustain itself through siege and control, or is this the beginning of a breakdown?